The beginning of 2025 finds Bitcoin at a crossroads. The cryptocurrency, which has seen its fair share of volatility over the years, now stands at a pivotal moment. Investors and traders alike are holding their breath, waiting to see which direction it will take. The leading cryptocurrency is locked in a period of relative stability, with its price hovering within a defined range. This stability is unusual for Bitcoin, known for its dramatic price swings. Some see this as a sign of maturity, while others believe it's the calm before the storm. This calm, however, might be deceptive. Beneath the surface, there are undercurrents of tension and anticipation. Traders are cautious, aware that any significant news could trigger a rapid change in Bitcoin's price. Market analysts and seasoned Bitcoin observers are keenly watching for a potential breakout, a decisive price movement that could dictate the cryptocurrency's trajectory for the months to come. They are analyzing charts, looking for patterns, and trying to predict the next big move. This anticipation is heightened by the looming Federal Open Market Committee meeting, scheduled for January 29, 2025. The FOMC meeting is always a significant event, but this one carries even more weight due to the current economic climate. The FOMC, responsible for setting monetary policy in the United States, holds significant sway over global financial markets. Its decisions can influence everything from interest rates to inflation, and its impact is felt across various asset classes. Its decisions have far-reaching consequences, influencing interest rates, inflation, and the performance of various asset classes, including cryptocurrencies like Bitcoin. Investors are particularly interested in how the FOMC's decisions will affect the broader market sentiment. The upcoming FOMC meeting carries even greater weight as it marks the first interest rate decision of 2025. The outcome of this meeting could set the tone for the rest of the year, influencing economic policies and market trends. The Federal Reserve's stance on interest rates will be closely scrutinized by investors and analysts alike, searching for clues about the future direction of the economy. A hike in interest rates could signal a tightening of monetary policy, while a cut could indicate an attempt to stimulate economic growth. For Bitcoin, the FOMC meeting represents a critical juncture, a moment of truth that could either propel its price upwards or trigger a downward spiral. The cryptocurrency market is highly sensitive to macroeconomic factors, and the Fed's decisions are among the most influential. As the cryptocurrency world holds its breath, all eyes turn to the Fed, whose actions will reverberate throughout the financial landscape. The outcome of this meeting could shape the future of Bitcoin and the broader cryptocurrency market for months, if not years, to come. Technical analysis of Bitcoin's recent price action reveals an intriguing pattern known as a narrowing triangle. This pattern is often closely watched by traders and analysts because it can provide significant insights into future price movements. This formation occurs when the price of an asset consolidates within a progressively tighter range, bounded by converging trendlines. The price action becomes more constrained, indicating a potential buildup of market pressure. The narrowing triangle is a classic chart pattern, often signaling an impending breakout, a sudden and sharp price movement in either direction. Traders often prepare for significant volatility when they observe this pattern. The narrowing triangle formation in Bitcoin's chart is creating a sense of anticipation among traders and investors. Many are speculating on the direction of the breakout, analyzing various indicators and market conditions. The longer the price remains confined within this pattern, the greater the potential energy building up, like a coiled spring ready to release. This buildup can lead to a more explosive move once the breakout occurs. A breakout to the upside would be a bullish signal, indicating a resurgence of buying pressure and potentially pushing Bitcoin's price to new highs. This could attract more investors, further fueling the upward momentum. Conversely, a downside break would be a bearish sign, suggesting a dominance of sellers and potentially leading to a significant price correction. This could trigger a wave of selling, exacerbating the downward movement. The question on everyone's mind is not if, but when and in which direction will the breakout occur. Traders are closely monitoring market signals and news events that could influence Bitcoin's price. The upcoming FOMC meeting could be the catalyst that triggers this decisive move. Market participants are eagerly awaiting the outcome, as it could provide the necessary impetus for Bitcoin to break out of its current range. The January 29th FOMC meeting holds immense significance for Bitcoin and the broader cryptocurrency market. This meeting is particularly crucial as it comes at a time when the market is grappling with heightened volatility and uncertainty. The Fed's decisions on interest rates and monetary policy have a direct impact on risk assets like Bitcoin. Investors are keenly watching for any signals that could indicate the future direction of monetary policy. A more hawkish Fed focused on tightening monetary policy to combat inflation could create headwinds for Bitcoin. This would likely lead to increased borrowing costs and reduced liquidity in the market. Higher interest rates tend to make traditional investments like bonds more attractive, potentially diverting capital away from riskier assets like cryptocurrencies. This shift in investment preference could lead to a decrease in demand for Bitcoin. Conversely, a more dovish Fed, signaling a willingness to keep interest rates low or even cut them, could provide a tailwind for Bitcoin. Such a stance would likely increase liquidity and lower the cost of borrowing, making riskier assets more appealing. Lower interest rates reduce the opportunity cost of holding Bitcoin, making it a more appealing investment option. Investors might be more inclined to allocate funds to Bitcoin in a low interest rate environment. The December 2024 FOMC meeting had already introduced a note of caution in the crypto market. The Fed's cautious approach had left investors on edge, anticipating further developments. The Fed, while continuing its rate hikes, hinted at a potentially slower pace of increases in 2025 than previously anticipated. This subtle shift in tone was enough to spark a range of reactions in the market. This more hawkish stance, suggesting fewer rate cuts in the near future, raised concerns among Bitcoin investors. The uncertainty surrounding future rate hikes has made the market more volatile. The January meeting therefore becomes crucial. Investors are looking for clarity and direction from the Fed's statements and decisions. Will the Fed maintain its hawkish stance, potentially dampening Bitcoin's prospects, or will it signal a more dovish pivot, injecting renewed optimism into the cryptocurrency market? The outcome of this meeting could set the tone for Bitcoin's performance in the coming months. The answer to this question will likely determine Bitcoin's direction in the short to medium term. Investors and analysts alike are eagerly awaiting the Fed's next move, as it could have far-reaching implications for the entire cryptocurrency market. Inflation, the persistent increase in the general price level of goods and services, has been a major economic theme in recent years. For Bitcoin, often touted as a hedge against inflation, the consumer price index numbers are of particular interest. A higher-than-expected CPI reading indicating accelerating inflation could potentially benefit Bitcoin. Investors seeking to preserve their purchasing power might turn to Bitcoin as a store of value, driving up its demand and price. Conversely, a lower-than-expected CPI, suggesting easing inflationary pressures, might dampen the appeal of Bitcoin as an inflation hedge. The relationship between inflation and Bitcoin, however, is complex and not always straightforward. Other factors, such as overall market sentiment, regulatory developments, and technological advancements, also play a role in shaping Bitcoin's price. Nonetheless, the CPI numbers, especially in the context of the upcoming FOMC meeting, will be closely watched by Bitcoin investors. A significant deviation from expectations could trigger heightened volatility in the cryptocurrency market. As we navigate the volatile waters of Bitcoin, it's important to recognize when caution is necessary. The market's unpredictability can be both an opportunity and a risk. So how can we prepare ourselves for the unexpected? Well, understanding historical trends and setting realistic expectations are crucial steps. Remember, it's not just about riding the highs, but also about weathering the lows. Stay informed, stay vigilant, and always be prepared for the twists and turns that come with the territory. When we look back at Bitcoin's historical price action, we can see patterns that often repeat themselves. By studying these patterns, investors can make more informed decisions. It's like reading a story where the past chapters give clues about future events. Understanding the probability of rate cuts is crucial for predicting Bitcoin's price movements. Central banks' decisions on interest rates can significantly impact the market. By gauging these probabilities, investors can better prepare for potential shifts in Bitcoin's value. Bitcoin doesn't exist in a vacuum. It's influenced by broader macroeconomic forces. Factors like inflation, unemployment rates, and global economic stability all play a role. By keeping an eye on these forces, investors can better understand Bitcoin's potential trajectories. Looking ahead to 2025 and beyond, the future of Bitcoin is filled with possibilities. Technological advancements, regulatory changes, and market adoption will all shape its path. While uncertainties remain, the potential for growth and innovation in the Bitcoin space is immense.